All right, let's dive in. We are living right in the middle of what everyone is calling the AI gold rush. It's a massive technological revolution. But, just like the old gold rushes, the biggest fortunes aren't always made by the people actually digging for gold. Today, we're going to look at the companies building the essential plumbing, the infrastructure for this entire new era. And that leads to a really important question.
Yeah, think about it. With absolutely everyone scrambling to build the next great AI application, it's so easy to get caught up in the hype. But if you want to understand where the real, sustainable value is being created, you have to ask, who is making this entire thing possible in the first place? And that's our whole framework for today. Back in the California gold rush, it wasn't just the lucky few who struck it rich. Nope, it was the smart entrepreneurs who were selling the tools, providing the transportation, and building the towns. We're going to apply that exact same logic to this AI boom and look for the companies selling the digital picks, shovels, and railroads of our century. So first up, let's start at the most fundamental layer, the hardware. These are the companies designing those specialized chips. We're talking GPUs, or graphics processing units, that are the raw horsepower behind every single AI model. Seriously, you can think of these as the essential high-tech tools that every single AI prospector needs just to get in the game. Now, in this space, there are really two names that just pop. You've got Nvidia, the clear and dominant market leader, the king of the hill, and then you have AMD, the ambitious challenger that is working incredibly hard to carve out its own piece of this very, very lucrative market. Let's start with the undisputed champ, Nvidia. For years, most of us knew them for making the graphics cards that powered high-end video games. But here's the brilliant accident of history. Their GPU architecture, which was designed to render millions of pixels at the same time for gaming, well, it turned out to be absolutely perfect for running the thousands of simultaneous calculations that AI models need. Because of that, they're now at the absolute heart of the AI infrastructure boom. And this slide, wow, this tells an incredible story. This isn't just growth, it is an absolute explosion. And what's driving it? Just look at that massive bar right there, data center demand. This is the AI gold rush visualized on a single chart. It shows an almost bottomless demand for their hardware from every company trying to build out AI. So what's the investment case look like? The bulls will point to that massive demand, NVIDIA's clear tech lead, and the fact they're locking in long-term contracts. But the bears, well, they have some valid points. The company's valuation has just soared, which means its stock price is basically priced for perfection. That could make it super sensitive to any little hiccup. Plus, you've always got supply chain risks and the ever-present threat of competition. And that brings us right to their main competitor, AMD. Now, AMD has been a fierce rival to Intel in the CPU market for years, and now they are making a really serious push into the AI data center space, going head-to-head with Nvidia. Their success is going to depend, big time, on their product roadmap and whether they can deliver those next-gen chips. And if you look at AMD's financials, you can see a company that's really hitting its stride. Revenue growth is strong, and no surprise here, it's also being fueled by data center demand. As their AI business gets bigger, profitability is improving, and they're starting to generate some serious free cash flow. And that cash is the lifeblood they can pour right back into designing the next generation of powerful chips. The bull case for AMD is pretty straightforward. The AI market is enormous, and there's definitely room for more than one winner. If their upcoming chips are competitive, they could absolutely capture a meaningful slice of the pie. The bear case is the other side of that coin. This is an intensely competitive and incredibly expensive business. They are in a tough fight against a very dominant leader. Okay, so that's the hardware. Now let's move up the stack. If the chips are the picks and shovels, then the cloud platforms, well, they're the boom towns. These are the massive, centralized computing hubs where all the AI development and deployment is actually happening. And in the world of cloud computing, two giants are making absolutely enormous plays in AI. You've got Microsoft leveraging its deep relationships with businesses all over the globe, and then you have Alphabet, Google's parent company, which is taking a deeply integrated, top-to-bottom innovative approach. Microsoft's strategy is all about integration. It's actually pretty brilliant. They use their massive Azure cloud platform to host these powerful AI tools, and then they cleverly embed those capabilities right into the products that millions of businesses depend on every single day, like Office 365 and Windows. It creates this powerful flywheel effect. And financially, Microsoft is a fortress. This table shows a business with consistent revenue growth from cloud and software, incredibly high profit margins, and just a truly robust ability to generate cash. I mean, this financial strength gives them the firepower to invest billions into AI without even blinking.
The bull case is simple. They see a long runway for growth as more companies adopt AI through Azure, and it's all supported by that stable, recurring software revenue. The bears, though, they worry that a slowdown in what businesses are spending could hurt cloud growth, and that the competition from Amazon and Google remains absolutely fierce.
Okay, now let's turn to Alphabet. Their advantage is a bit different. They have an incredibly deep, integrated technology stack. This means they design their own custom AI chips, they run one of the world's biggest cloud platforms, and they develop foundational AI models like Gemini. This control over the entire pipeline, from the silicon to the software, it's a massive strategic asset. And just like Microsoft, Alphabet is a financial powerhouse. Its legendary search and advertising business is basically a cash-generating machine. This gives them the freedom to make these massive long-term bets on Google Cloud and foundational AI research. And as you can see from the numbers right here, that strategy is paying off with very strong growth and profitability. So the bull case for Alphabet really centers on that deep AI integration and the accelerating growth of its cloud business. But the company faces a significant headwind, regulatory risk. Antitrust and privacy concerns are a constant focus for governments all around the world, and this presents a real, ongoing risk to their whole business model. For our final company, we're taking a look at a different kind of story. This isn't one of the usual suspects. This is an established, legacy player that's attempting a massive strategic pivot to retool itself for the AI boom. This is the contrarian play. And that company is Oracle. Yeah, Oracle. For decades, they've been a dominant force in enterprise databases and software. Now, they're making a huge bet on the cloud with their Oracle Cloud Infrastructure, or OCI, and they are specifically optimizing their data centers to handle the high-performance computing that AI needs. And when you look at Oracle's financials, you can actually see this transition happening. The overall revenue growth is moderate, but the real story is the growth in their cloud business. All the while, their profitable legacy software business just keeps providing the cash they need to fund this ambitious and really capital-intensive pivot. So what's the argument here? The bull case is that Oracle can leverage its massive existing enterprise customer base and successfully sell them on its new AI-optimized cloud services. If they succeed, investors could start to see the company in a whole new light, which could lead to a much higher stock price. The bear case? It's all about risk. The competition is brutal. AWS, Azure, GCP, and there is a huge execution risk in trying to scale up and compete with those big three players. So to recap, we've looked at 3 distinct categories for your 2026 infrastructure watch list. First, you have the AI hardware players, the picks and shovels like Nvidia and AMD. Then you've got the cloud platforms, the boomtowns built by Microsoft and Alphabet. And finally, there's the contrarian play from an established player like Oracle. Which brings us to our final question. As this AI build-out just keeps accelerating towards 2026 and beyond, which of these layers is ultimately going to prove to be the most valuable? Will it be the hardware makers selling the essential tools, or will it be the cloud giants who own the digital real estate where it all happens? That's really the key question for anyone watching this incredible technological shift unfold.